Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let us get started. Wall Street indices extended losses for the fourth week in a row as companies signal consumer spending slowdown. The drumbeat of cautious outlook came from deep discount retailers, general merchandisers, specialty retailers, luxury goods purveyors, airlines, and vehicle makers. Consumer Sentiment Index tracked by the Conference Board only confirmed what has been widely discussed by executives in earnings calls, that things are slowing down and Trump tariffs are only adding to anxieties. Escalating global trade war has added to market declines in Europe, China, India, and Japan as investors struggle to understand impact of increasingly hostile U.S. stance to world trade. Investors are concerned that the constantly changing Trump administration's tariff wars are adding another layer to the market volatility, economic uncertainty, and turmoil in the world trade. On the U.S. inflation front, the news was better than expected for now. Consumer price inflation for February eased to 2.8% from 3% in January. The easing of inflation was partly driven by a sharp fall in gasoline prices, but shelter inflation inched down a little to 4.2% from 4.4%, and food price inflation accelerated 2.6% from 2.5%. On core inflation side, which excludes volatile food and energy prices, slowed to 3.1% from 3.3% and dropped to the lowest level since April 2021. The slow pace in improvement in core inflation supports the case for policymakers to pause future rate cuts. The latest producer price inflation report also showed that those tariff wars for now have not fueled inflation. Producer price inflation was 3.2% in February, slower than revised 3.7% in January. Core inflation, which excludes volatile energy, food prices, and services, slowed to a 10-month low of 3.3% in February. Despite the slowdown in consumer and producer price inflation, both measures are still higher than 2%, suggesting that elevated levels are here to stay for several months or longer. And when you add the tariffs that are coming down the pike, inflation is only likely to rebound. Across the Pacific, the world's second-largest economy confirmed the ongoing lack of consumer demand growth. China's consumer price inflation declined 0.7% from a year ago in February, according to a report released by the Statistical Bureau. Retail inflation reversed the 0.5% increase in the previous month and fell for the first time since January 2024. Demand waned after ending of the Spring Festival amid a fall in price for food and transportation. Core inflation, which excludes volatile food and energy prices, decreased 0.1%. In addition, China's producer price deflation extended to the 29th consecutive month in February. The measure of prices charged by manufacturers declined 2.2% from a year ago. China's household spending has remained subdued because of several factors negatively impacting consumer sentiment: rising trade tensions with the U.S., the ending of rebates for household supplies and electric vehicles, front-loading by the U.S. importers ahead of tariffs, and protracted recovery in the residential real estate market. India's passenger vehicle sales rebounded to a record level for February month, but eased from the previous month's high. Automakers shipped about 377,000 vehicles in the month, but only 331,000 were sold, indicating that production is ahead of the demand. However, sale of two-wheelers dropped 9% to 1.4 million units after buyers stayed away following the festival season. India's consumer price inflation dropped to a 7-month low of 3.6% in February, staying firmly in the range preferred by the central bank. The easing of food prices, which account for about half of India's inflation basket, supported the decline in overall inflation. In other economic news from around the world, Japan's nominal wages rose in January but failed to keep up with inflation. Japan's widely followed spring wage negotiations yielded a record high increase of about 5.5%. Japan's large corporations agreed to wage hikes of more than 5% for the second consecutive year because of shortage of skilled labor, rising cost of living, and fear of losing its talented workers to competitors. Germany's goods trade surplus shrank to a three-month low of 16 billion euros after exports edged slightly lower and imports advanced nearly 9%. Let us review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury rebounded to 4.3% amid expectations of interest rates staying higher, driven by constantly expanding the list of countries hit with the U.S. tariffs. Texas crude oil prices rebounded from losses earlier in the week to $67 a barrel after the U.S. slapped sanctions on Iranian oil and shipping. Natural gas prices in Europe advanced to 42 euros per megawatt hour as traders reviewed the return of colder weather conditions across the continent, and Russia rejected the U.S.-led 30-day ceasefire in Ukraine. The euro soared to $1.09 as investors welcomed political agreement in Germany to overhaul debt and ramp up infrastructure investment and arms production. The yen hovered at 148 against the U.S. dollar after Governor Kazuo Ueda reiterated central bank's plans to shrink its large balance sheet. Let us shift our attention to major stock markets in the U.S., Europe, and Asia. The S&P 500 index and the Nasdaq Composite extended losses for the fourth consecutive week amid growing anxieties about Trump's tariff flip-flops and decelerating U.S. economic growth. European markets struggled to advance after trade tensions with the U.S. rose, but the political agreement to ramp up arms production powered the rally in defense stocks. The Nikkei 225 stock average halted a three-week slide after bargain hunters returned to snap up technology and defense stocks as Japan ramped up its arms buildup. Hong Kong and China indices delivered mixed performance amid a lack of clarity related to stimulus implementation and slowing demand for new loans in February. India market indices closed down in a holiday-shortened week after inflation dropped to a 7-month low, but investors remained cautious amid persistent outflow of foreign funds. Let us shift our attention to merger deals, market movers, and earnings update from leading companies last week. Oracle Corporation hiked its quarterly dividend after the database company reported strong quarterly results and held out for higher revenue in the current quarter. Adobe reported strong quarterly results, but the company's outlook fell short of market expectations. Dollar General reported higher sales in the fiscal fourth quarter, but cautioned that its core customers are struggling to make ends meet. Ulta Beauty reported mixed quarterly results, but the cosmetic retailer held out for higher sales in the current fiscal year. Inditex, the parent company of Zara, declined after Spain-based fashion retailer reported strong fourth quarter results, but the company said sales growth is slowing down in the current quarter. Volkswagen reported a 15% decline in annual earnings amid restructuring costs, but the automaker held out for a 5% increase in sales in 2025. BMW said sales dropped 15% and earnings plunged 37% in 2024 amid demand weakness in China, and the luxury automaker cut its dividend. Hugo Boss hiked its dividend but said that higher tariffs could drag down annual sales in the U.S. and said outlook in China remains weak. Rheinmetall, the German tank maker, held out for higher sales for its arms production amid rising demand in Europe. Henkel AG announced a new stock buyback program of up to €1 billion after the consumer goods company reported strong results for 2024. Puma's weak sales outlook and dividend cut dragged down the stock to the level last seen in 2016. Domino's Pizza UK hiked its dividend after the company reported better than expected full-year earnings. In the week ahead, the Federal Reserve is expected to hold steady federal fund rates range between 4.25% and 4.5%, extending the pause in its rate cycle that began in January. The Federal Reserve will also release its estimate of GDP growth, jobless rate, inflation, and interest rates. Investors are also looking forward to the release of retail sales, industrial production, existing home sales, and housing starts and completions in the U.S. On the earnings front, investors are waiting the update from Signet Jewelers, Five Below, Progressive Corporation, FedEx, Nike, Accenture, Lennar, Carnival Corporation, Micron Technology, and General Mills. In Europe, the Bank of England is widely expected to hold rates steady at 4.5%. The Swiss National Bank is expected to cut its rate by 25 basis points, but the Sweden's Riksbank is likely to hold rates steady, possibly ending its easing cycle. Investors are also looking ahead to the release of inflation for the euro area, Germany, and France this week. On the earnings front, investors are looking forward to the release of results from Audi, Hapag-Lloyd, Fraport, Aéroport de Paris, Bolloré, RWE, Salzgitter, RTL Group, Torts, Trustpilot Group, and JD Wetherspoon plc. In Asia, China's retail sales, property prices, fixed asset investments, and industrial production data are on the schedule of release from the government. The Bank of Japan is anticipated to hold its rate steady, and international trade balance and inflation are also awaited in Japan. India's international trade data are also anticipated in the week ahead. On the earnings front, investors are looking forward to financial results from Ping An Insurance, Geely Automobile, Costco Shipping, San Miguel Corporation, Tencent Holding, Anta Sports, Henderson Land Development, Fila Holdings, and Longfor Group. You can review daily U.S. and global financial market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on rodera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That's all for today, and we will